Welcome to MFAA On Air.
Following the release of Corelogic's June property market results, MFAA On Air spoke to Corelogic's Australian Head of Research, Cameron Kusher, about the current property market trends across the capitals, how the future is likely to look, and where brokers can look for opportunities.
I think what brokers need to be aware of is we're pretty much seeing conditions that are fairly similar to what we've seen over the last 4 years. Sydney and Melbourne are still standing out as the strongest housing markets. The Hobart housing market, it's a bit hard to decipher exactly what's driving that, but I suspect what we're finding is people that have got a lot of equity sitting in their properties in Melbourne, for example, are now looking to buy lifestyle properties outside of that city and are looking to a market like Hobart. Darwin and Perth are really seeing values continuing to fall, and that's really being driven by the fact that it's the end of the resource investment boom. Adelaide's really being held back by the economic conditions there as well. And then if we look at markets like Canberra and Brisbane, they're seeing modest levels of growth. It has picked up a little bit over the last 6 to 12 months. You've got to know where to target your audience. Obviously, people in Sydney and Melbourne have got a lot of equity sitting in their properties, so they're prime suspects to look for an investment property, maybe look for some sort of retirement property. That may not necessarily be in Sydney or Melbourne. It might be in regional parts of those states. It might be in other parts of the country. We know that tourism and lifestyle property is starting to pick up again. And then obviously for people in Perth and Darwin, they may need to refinance to get their affairs in order with those housing markets, with the values falling and the level of equity in their properties declining. I think things are still looking pretty positive in terms of what we're expecting over the next 12 months. I think the big opportunity at the moment is the investor space. Even though we know that investment lending has slowed, we know that people in Sydney and Melbourne have a lot of equity in their properties, and there's obviously a lot of competition out there in the mortgage market. So what you'll find though is people will more and more be looking in Sydney and Melbourne to invest outside of those cities, knowing that they've both been seeing values rise for 4 years. Rental returns are at their lowest they've ever been. So there's probably some better opportunities outside of those markets. We're a long way from Brexit, but I think what it will do is it's obviously created a lot of volatility on the financial markets, and depending on where it goes from here, if we start to see other countries wanting to pull out of the EU, then that could turn into a bigger problem across the world financial markets. What it may also do is bring forward the decision by the Reserve Bank to cut interest rates. So a lot of people are now saying that we may get an interest rate cut as early as August. I think that will also mean that the Reserve Bank and the regulator will be watching very closely and maybe tightening some of the lending policies out there again. Check in regularly with your customers, give them a good understanding of how much equity they've got in their property, what their options are. Even come to them and say, I can get you a better deal on your mortgage than what you've got at the moment. And just showing your customers that you're really out there looking out for their best interests.
To find out more about the state of the industry and the opportunities that are in store for brokers, keep an eye out for the MFAA's latest Industry Intelligence Service report, which will be released in August.
You've been watching MFAA On Air.